Does the board of directors need to approve a CEO's decision to sign a pledge on behalf of the company, particularly when that pledge comes to altering the three-legged stool of corporate governance? Today on Zippy Point.
Quick Zips by Zippy Point.
Quick and dirty. I'm Brock Romanek, and I'm a big fan of yous. So this op-ed in the Wall Street Journal by Lucian, Bebchuk, and Roberto Tallarita back in August 2020 created quite a stir. They're the director and associate director, respectively, of the Harvard Law School's program on corporate governance. The op-ed challenged whether CEOs had the right to sign on to the BRT statement on corporate purpose. That statement on corporate purpose appeared to alter the traditional three-legged stool of corporate governance, management, board, and shareholders, by adding a fourth leg into the mix, stakeholders, meaning that employees, customers, suppliers, communities, society at large. Those are stakeholders. When it came out in August 2019, 181 CEOs signed on to the BRT statement, and it led to much controversy, particularly shareholders who were angry that their shareholder primacy was being challenged. For example, this response from the Council of Institutional Investors stated that even though CII thinks it's critical to respect stakeholders when it comes to long-term shareholder value, management needs to have clear accountability to the company's owners. Accountability to everyone means accountability to no one. That's the key sentence in the CII's response. Lucian and Roberto highlight this thought by noting that although the roundtable described the statement as a radical departure from shareholder primacy, observers have been debating whether it signaled a significant shift in how business operates, or was it a mere public relations move? So these two guys contacted the 180 companies to ask if the board had indeed improved the CEO's decision to sign on to the BRT statement. And only 30% of the companies responded, 48 of these companies. And only one of the 48 said that the board did indeed approve the CEO's support. Here's how Lucian and Roberto interpret that. The most plausible explanation for the lack of board approval is that the CEOs didn't regard the statement as a real commitment to a major change in how companies treat stakeholders. That's the upshot. Then they go on to note that the corporate governance guidelines of these 181 companies that signed on to the BRT statement haven't been updated to move away from statements of shareholder primacy that are within those corporate governance guidelines, and that many of these companies remain incorporated in the state of Delaware, where the business laws are clearly shareholder-centric. So now it's going to be interesting to see how this controversy continues to play out. It'll be interesting to see how companies respond. Or if they do respond, will they now obtain shareholder approval for their CEO's pledges? Will they alter their corporate governance guidelines? Let me know what you think.